This is Oliver Slope with Blue Line Futures coming to you from the floor of the CME here in Chicago with your grain market update. And we have kind of seen the rally stall out here in grains, which I think was as to be expected. We kind of ran out of new news to fuel the bull and really failed against technical resistance as well. For that March corn contract, we've defined that as 388 to 390. This pocket represents the 50 and 100-day moving average, but I think more importantly, it represents previously important price points. Those price points being the breakout point from that September 30th quarterly stocks report that also then became support on the October USDA report. So this has been an area where we've seen a lot of interaction between the bulls and the bears. We like the idea of seeing demand come back into the market at the turn of the year. We started to see that here with exports this morning. A great number, marketing year high. If we can continue to see this become more of a trend, I wouldn't be surprised to see that encourage additional short covering into the new year, take us out above that technical resistance pocket, and spur another leg higher back above that psychologically significant $4 handle. The target realistically above $4, 407 to 411. This pocket represents a key Fibonacci retracement, a 200-day moving average, as well as the highs from back in October. Now, moving over to the soybean market, a little bit less optimistic, but still overall pretty friendly. The market rallied on the news that we were getting a trade deal done with China. Still, I think this was maybe just a bubble-wrapped way to say that we were canceling those December 15th tariffs. A lot of technical resistance, 928 to 931. This represents a key retracement in the gap and breakdown point from the middle of November. We stalled out above here. I think a healthy pullback would be nice for the market. 918 to 920 is a bit of a pivot pocket. If we close below here, wouldn't be surprised to see additional selling take us a little closer towards $9 as we head into option expiration next week. Now, wrapping things up with the wheat market, wheat has been really friendly. We saw that earlier in the week, and we saw a reason why it was friendlier today, and that was great exports. Again, marketing year high for wheat. I think a lot of that was priced in earlier in the week as we're not seeing any follow through today. 544 to 546 for that Chicago contract, a bit of a pivot pocket. If we close below here, wouldn't be surprised to see some profit taking from recent buyers take us a little closer to 530. Kansas City hovering right around that 200-day moving average at about 459. A break and close below here probably triggers a little bit of profit taking. We like being on the short side of Chicago up here. We like being long Kansas City, but I think you'll have an opportunity to do so at a better price. So be patient here as we look into the end of the week. So that's what we're looking at. That's what you should be looking at too. This has been Oliver Slope with Blue Line Futures from the floor of the CME.